And welcome back to your weekly update in the finance YouTube space. I'll be covering the hack where over $600 million in cryptocurrency was stolen, Ethereum got a massive upgrade that we're going to talk about, and Jung gives us great advice on how to capitalize on altcoins. I'm Dever Cook, and welcome back to DevMoney. And just as a heads up, this week's news update will be a bit shorter just because I had a baby about 2 days ago, so yay for that. But next week I'll make sure it's much more thorough and back to the usual schedule. So first things first, let's talk about the crypto hack where over $600 million in cryptocurrency was stolen. Everybody on YouTube is talking about it, from Graham Stephan, Andrei, Jikh, Jung, BitBoy Crypto, and tons of other channels. So what exactly happened? Well, Andrei made a great video on what happened, so I'm gonna make sure to link it down below. Go check it out, but I'll summarize it here. A total of $611 million in cryptocurrency was stolen, which included $273 million in Ethereum, $253 million in Binance Coin, and another $85 million in USDC. Keep in mind that the blockchain itself wasn't hacked. Cryptocurrency as a whole is not in jeopardy. The only thing that got hacked was a network or an exchange. And in this case, it was the DeFi Poly Network exchange that was hacked. And if you've never used or heard of the Poly Network, it's basically used to convert one cryptocurrency into another. So if you have Bitcoin and you want to convert it into Ethereum or Dogecoin or Cardano or anything else, you can do it there on the Poly Network. So what happened was the hacker or the attacker was able to modify what's called the keeper role. And he did this in a way that after replacing the address of the keeper role, the attacker was then able to construct a transaction and then withdraw those funds from the contract. There's a link below with a very detailed analysis on exactly how this happened, so definitely go check that out. But fortunately, at the time of recording, all but $33 million have been returned, which is excellent. And hopefully in the coming days, we see that last $33 million returned as well. The next top story is the Ethereum upgrade, which is called the London hard fork upgrade. And this upgrade drove the price of Ethereum back up over $3,000, and it takes us one step closer to getting towards Ethereum 2.0, which we should get to by early next year. Now, the biggest thing that the London hard fork upgrade did was change how the gas fees on Ethereum work. Now, if you're not aware, gas fees are essentially transaction fees that you have to pay whenever you're using your Ethereum. And the gas fees per transaction have gotten ridiculous, as much as $69, which is crazy when you're trying to send just a few dollars to somebody or trying to buy something with Ethereum. Now, the reason that the gas fees have gotten so high with Ethereum is because each transaction has to go on a block, and each block has a limited size and thus a limited amount of transactions that can fit on each block. And when people go crazy buying Ethereum or buying things with their Ethereum, like NFTs that are really popular, like CryptoPunks or VFriends, the network gets really bogged down and we have to pay the miners more and more money to get our transactions included on the block. Andrei says to think about it like this. Imagine you're at a bus stop and every 10 to 15 seconds another bus is going by, but each bus is full. Well, what's gonna happen? You're never gonna get on that bus unless you bribe the bus driver a lot of money to get you onto that bus. And that's essentially what's happening with Ethereum right now and why gas fees are so high, because you're having to bribe the miners more and more money to get your transactions included on the blocks so that way they go through. And with the London hard fork upgrade, instead of having the gas fees work off of a bidding system like they used to, they're now gonna be a set amount that's based on an algorithm. This should help keep the gas fees much lower than they have been. And on top of that, they've also increased the block size so that more transactions can fit on each block. So this upgrade is gonna help Ethereum be much more cost effective, be much more usable for the everyday person, and it helps us get even closer to Ethereum 2.0, which is coming next year, and is gonna be a massive upgrade for the Ethereum network as a whole. Now, if you wished you had invested in Ethereum or Bitcoin back in the early days so you could be sitting pretty as a cryptocurrency millionaire, well, join the club. I wish I did as well. But Jung gives us a great strategy that we can use to utilize altcoins to maximize our returns, as long as you're okay with the risk associated with it. So make sure to check out his video, but this is basically what he said. He talks about whether or not you should FOMO into cryptocurrencies that are seeing exponential growth. He uses IOTX as an example, which has gotten over 400% returns in the last 7 days, which is just crazy, especially considering Apple just this year has only gotten 30% returns, which is high, but not when compared to 400% returns. He says that this happens a lot with cryptocurrencies due to what's called the Coinbase effect, meaning once a cryptocurrency is listed on Coinbase, it's accessible to a much larger audience because Coinbase is one of the most widely used cryptocurrency exchange platforms. And when a lot of people have access to a new promising coin that just came out on Coinbase, a lot of people buy in, and this just drives the price sky high. But I really agree with Brian, because he says that when a cryptocurrency is going super high and seeing exponential growth, that is probably not the best time to invest in that cryptocurrency because it's really ripe for a market correction. The better route is to find a cryptocurrency that is in the earlier stages and not listed on as many cryptocurrencies. And it is a bit of a gamble, but if you find a project that has a lot of potential and you have a lot of faith in, you could potentially see 10x, 100x, or even 1000x returns on your money. But keep in mind that just as easily you could lose it all as well. And so yeah, that's a risky play, but that's exactly the risk that the people that invested in Bitcoin and Ethereum early on took, and it really paid off for them as long as they held their coins. And if you're really not that interested in gambling away your money with a small cryptocurrency project, and you want something that's more of a stable, tried and true investment, check out this video I just made on the stock market versus the real estate market as an investment. Thanks for watching this video, and I'll see you in the next one.